America's mortgaging financing giant Fannie Mae sues 9 of the world's biggest banks over alleged interest rate manipulation. Recapitalize or else, the International Monetary Fund puts an ultimatum to Slovenia's ailing banking industry. Very warm welcome to you there. This is World Business Report with me, Alice Baxter. In just a minute, we'll also be taking a look at the privatisation of Nigeria's electricity sector. But first this hour, America's biggest mortgage giant Fannie Mae is suing 9 of the world's largest banks. It accuses them of colluding to manipulate interest rates and is seeking $800 million in damages. Marika Oy has the details.
The troubles of the financial services industry continue, with the latest development that U.S. mortgage finance company Fannie Mae suing 9 of the world's biggest banks for manipulating the interest rate. We're talking about what's known as LIBOR, that stands for London Interbank Offered Rate. It's a global benchmark interest rate that is used around the world to set a range of financial transactions worth an estimated $300 trillion. Now, some of the banks that are being sued, they've already admitted to wrongdoing in order to settle with the regulators. Fannie Mae says it lost money because of the manipulation and seeking more than $800 million in damages. Its smaller rival, Freddie Mac, also filed a similar lawsuit back in March against more than a dozen banks, as well as the British Bankers Association, accusing it of knowing about the manipulation and yet not doing anything to stop it. The banks do face private lawsuits as well, but analysts say that Fannie and Freddie are the type of plaintiff that can be expected to put up a tough fight because they're owned by the U.S. government, so real beneficiaries of their lawsuits essentially are U.S. taxpayers.
Now, Slovenia has been warned by the IMF that it urgently needs to recapitalise its troubled banks as the country tries to avoid an international bailout. Well, Slovenia's largely state-owned banking sector is carrying €8 billion of bad debt, but is waiting for the results of external stress tests before taking any action. However, analysts worry that the country may not have sufficient euro reserves in order to do so. Well, with me now is James Howard, an economist with Capital Economics. Many thanks for joining me, James. So just how badly a situation are Slovenia's banks in?
It's pretty bad. I mean, Slovenia's been in the state of perpetual banking crisis basically for the last 5 years. I think Slovenia does have some real strengths, though. The banking sector itself, although the problems within it are big, because the banking sector is fairly small relative to the economy, the size of the non-performing loans, in the scheme of things, is relatively small. And given that the government's debt levels are fairly low, the government probably has the fiscal room to deal with it if it acts swiftly. And
why has it got to this stage? Is this a failure of government policy?
Oh, definitely. So, Slovenia joined the euro in 2007, and you had this convergent process of interest rates falling, and this meant that banks went on a big lending sort of boom, particularly to the construction sector. And you've had all those things go bad during the financial crisis, and the last 5 years they haven't really dealt with it. So the economy's been in a slump, which has exacerbated the bad debts in the system.
And so now the IMF, the International Monetary Fund, has told the banks they have to recapitalise, but can it afford to do that?
Well, so the Slovenian government's put aside about 1.2 billion euros to recapitalise the banks. It's about 2.5–3% of GDP. I think the consensus is the hole in bank balance sheets is probably going to be substantially bigger than that, perhaps double that. But I think if the government acts swiftly and does this process transparently and aggressively, it can probably raise extra financing on the markets.
So it will have to go to market in order to raise the necessary number of euros?
I think there's a very good chance it will do. I suppose there's also a question of timing. The Slovenian government has set up a bad bank, but how you transfer the bad loans from the banks to this bad bank is quite a complex process, and you can decide to recognise losses now or later. It really depends. The timing of it can be, quite flexible. OK,
James, many thanks. Many thanks for coming in and talking to us. James Howard there from Capital Economics. Now, Africa's biggest privatisation will be completed on Friday with the handover of the former power holding company of Nigeria to a series of private consortia. But the $3 billion sell-off has upset many of the country's electricity workers. They're threatening to plunge Nigeria into darkness on Friday in a strike over unpaid redundancy. Tommy Aladipo reports now from Lagos.
The droning of generators is a sound you have to get used to when you live in Nigeria. That's because the state provides very few hours of electricity every day, and so Nigerians are forced to rely on these noisy machines to get by every day. Now, to put this into perspective, 60 million Nigerians rely on generators both at home and at work. Now, that's a huge number, and these generators are run by fuel, which makes running business very expensive. Now, Nigeria produces 1/10 of the electricity that South Africa produces, yet Nigeria's population is 3 times larger. It's a problem that's gone on for decades, and the government has spent billions of dollars trying to reform the power sector. But there's been little to show for this. In fact, there's been a lot of corruption, and this money has gone down the drain. Now, recently, in the past few years, after a lot of deliberation, the government is now privatizing the power sector, and so the assets belonging to the state-run agency are being handed over to private investors, both local and international, who will then take over generation and distribution of electricity. Economists say that if this is successful, it could bring down the cost of business in Nigeria by 40%. That could be attractive to big businesses, particularly manufacturers, who will be able to create jobs, and this will provide a boost for the Nigerian economy. Now, labor unions are saying that before the state-run agency becomes defunct and the workers are laid off, these workers have to be paid their allowances, and labor unions are threatening to go on strike, nationwide strike, if these workers don't get their pay.
Tommy Aladipo there. Now, China's manufacturing activity grew at its fastest pace in 18 months in October, adding to signs of a recovery in the world's second largest economy. Well, Rico Hazon is in our Asia Business Hub in Singapore for us. Good to see you, Rico. So some good data coming out of China.
Yes, economic fundamentals, if you take a look at the numbers, are indeed improving on the mainland. The official Purchasing Managers Index, or the PMI, the manufacturing benchmark, rose, Alice, to 51.4 in the month of October, and that is compared to 51.1 the month before. A reading above 50 indicates an expansion, but there are still some skeptics out there who are cautioning that the underlying data suggests a strong economic rebound is not likely, as monetary policy tightening will likely continue given the stronger manufacturing data and with new orders falling. Also today, Alice, you have the HSBC PMI index being released, which surged to a 7-month high in October. And the UK lender is saying that China is on track for a gradual growth recovery, and the stronger manufacturing growth momentum has helped employment expand for the first time since March. And this in turn, they believe, will support private consumption growth in the coming months. But despite the positive news, this is welcomed cautiously by the markets, with Shanghai and Hong Kong stocks just up slightly. Alice.
We'll be having a look at those numbers in just a moment. OK, Rico, many thanks for that update. Rico is on there for us in Singapore. OK, a little bit of other news for you now this morning. The UK's Royal Bank of Scotland has suspended 2 traders in connection to a growing investigation into the possible manipulation of foreign exchange rates. The news follows reports that London-based executives at 3 other major banks have been placed on leave. Well, regulators in the UK, the US and Switzerland are looking into whether banks colluded to set exchange rates. OK, well, as promised, let's have a look at those numbers over in Asia. And as Rico was suggesting, Asian markets actually quite mixed on Friday, with Tokyo hit by an 11% slump in Sony after those very weak results that we saw out yesterday, and cutting its profit forecast for the year to March by 40%. Meanwhile, Shanghai and Hong Kong were being lifted than that better than expected Chinese manufacturing data, but currently markets down across the board. OK, from me and the team, bye for now.